Okay, so again, my name is Ali Din, and I'm based in New York City. I'm currently the Chief Marketing Officer for a cloud services provider. We've been in business since 2011, and prior to that, I was at a IT solution provider. I was running the product marketing as well as the corporate marketing side. We were doing about $1 billion in revenue and reselling software as well as hardware, mostly to business and to government. So we did a lot of experimentation with marketing using some co-op funds. So what I'm going to do is go into two parts. So we'll have part one, then we're going to have a break, and then we'll have part two. Of course, it's important to have growth because you need to actually become a viable business. But then it's like having the stuff coming in, and then you don't want the revenue leaking out. So you also need to figure out how to stop churn in your business. So I thought it was important to address that piece as well. So we'll start off with just we'll dive right into a couple of growth hack tips, and then if there's questions, comments, we can cover them toward the end of that section. So the first one is pretty simple. This is straightforward, where if you are sending out emails out of your application or out of your service, then it's always great to throw in a little bit of a footer in your emails. So for example, like Hotmail used to say, P.S. get your free email at hotmail.com, and that helped them really grow very quickly. This is another example where they're just trying to drive you with call to actions in the email, just reminding people. So this is automated, part of your application, part of your system, but at the same time, of course, everyone in your company, when they email out externally, they should just have a habit in their signatures, that it mentions your company very simply. You don't want to have too much clutter at the bottom of your signatures. So moving kind of to the next stage, then this gets into a little bit more involvement where you're now giving stuff or incentives. So there's a little bit more operational aspect to this piece. It's not as simple as just throwing in something in your footer. You're saying, hey, I'm going to give you an offer. So this is Dropbox, and they're just one example. OneDrive does the same thing, where as you share or you invite a friend, you get more credits. And this is just because of their businesses in storage, people want more storage, so they were incenting them to get that. I think when I synchronized my photos to my OneDrive, it gave me another 1 gigabyte, for example. So it's just trying to drive engagement and trying to get adoption. So this is basically stuff you want to do to get your first 100 customers and get things up in traction. Is just start giving things away and giving people an opportunity to engage more with your service. On the as it gets a little bit more deeper into the effort level, I call it kind of field testing, or did it right, IDI, in-depth interviews. So in this case, what you want to do is if you have an application or you have a service, it takes a bit more effort to go find these people, but you want to go and find, even if you have to go out on the street and find people and say, hey, I want you to look at my application, or I want you to try my product and tell me what you think, and watch them using it. And there's obviously different ways to do it. You can do it completely unaided, and you just say, hey, this is, go at it, see what you think this is. Or you can guide them through to try to get different types of perspectives, but that's a very powerful way to get feedback, especially in the early stage. You want to iterate. You don't want to, what I find in Europe is there's a tendency to make the perfect product, and in the US it's called fail fast. You get 80% of the way there, and you roll it out and you put out a beta. And that's what you want to do is there's going to be changes and iterations in your product. So you want to get that feedback from your customers. And this is a good habit to begin that phase of getting direct feedback from your customers or from your prospects. So that might be, you might have to incentivize them with, hey, here's coffee or fish and chips or pizza to get them to come in and do that. So even if you have to budget for it, it's worth it to get that feedback. So this all really ties to Agile marketing. If you're all familiar with this is basically, again, going back to iterative testing. So you want to essentially do small tests see how they go. You want to validate them, and then you want to scale them out. So you might want to change colors. You might want to add buttons. In some cases, we've seen companies where they'll put a button on their website and just see if people will click it, and they'll have nothing behind it. So they're just testing if people are clicking it. And some companies will, maybe they'll take them to another screen and say, sorry, this feature, thank you for your interest, this feature is still coming. And people don't mind it because they see that, okay, this is something beneficial for us. So when I heard that, I thought that was kind of strange to put something that doesn't work. But these companies that are scaling quickly, they do these kinds of things to be very agile in their approach. So now I'm going to go into a little bit of measurements and testing as well. So when you take a look at, from a budgeting perspective, what you're doing out in the marketplace, this is just an example of a spreadsheet. So you'll have your different channels. So you'll have, the grids didn't pop in, but you have, Facebook, LinkedIn, whatever channels you're using. And then you want to take a look at your budget. So you have, $500, $50, $100, whatever it is. Oh, sorry, pounds. And you want to put that there, and then you'll have your totals. And then you want to take a look at, sometimes it's about branding. You want to get the word out there. And so you're just looking at impressions and cost per 1,000 impressions. Or you're actually looking for a click or an action or a sign up for a trial. And so you want to measure that. And then you want to take a look at your cost per action. So now you can take a look at what's happening within a certain time period of where you're getting the most bang for your buck. And I'll give you an example. And when we were doing, for our business, we were doing a number of these options. And what we found is LinkedIn was the most expensive for us on the cost per action, the cost per click as a B2B provider. It was something like $6 or £6. And on Twitter, it might have been 40 cents or 40p or at the most $1, $1.50, something like that. But when we went to the next stage, which I'll talk about in a second, the cost per lead, that's where the magic happened. Is all of a sudden the cost per acquisition, the cost per lead dropped dramatically from those leads that came through LinkedIn versus those that came from Twitter. So this is just one example of what you want to capture, and if you have someone in digital that can look at time on site and things like that, you can see how engaged those audiences are as well. From a tools perspective, so you want to make sure you're tracking your sources. If you're familiar with this UTM codes, you attach that to everything so that you can go back in your Google Analytics or whatever it might be and figure out what you're doing. Is this an email campaign driving this? Was this a webinar? Was this coming through social media? Wherever it was coming from, so that you can then have campaigns and you can track the effectiveness of them. You can do this all in a spreadsheet, but ideally you want to have a CRM system at some point. So once you have your CRM system, you're tracking your prospects, you're tracking your customers, you might be tracking your vendors as well. And now you can really see these reports and do these comparisons. And then you get to that next level, which is that cost per lead. So we have the cost per action, which is, hey, someone signed up and registered or got a free trial. And that's great, but you want to go to the next stage, which we're going to take a look at the funnel in a second. And you want to get that extra thing is how much does it take for me to actually get a customer? That's the key. You should be willing to pay more on that lead, initial click, if the cost per lead at the end of the day is lower from that channel. I think we're going to go through this very quickly. Okay, so tracking your conversion, the funnel. So you have your website visitors at the top. Then you have these acquisitions. This is basically people, you got them to click on an ad, or you got them to click on something, an email, and now they've signed up for a trial, or they've signed up for more information to request info or get a quote. And so the next stage is, how do you get them to sign up as a customer? That's your activation of that lead. And then of course you want to retain them. So these are just ranges you have in terms of, you have, let's say 10,000 visitors to the website, and then you might have 1.1% conversion from those visitors to people that actually sign up or request a free trial. And then from there, the people that request a trial and become a customer, you may be looking at probably 18, 20% in the early stages. This is where Agile marketing comes in, is you have to test. So our team has this saying called always be testing. You always want to be iterating and testing. And so, for example, if you saw some numbers in here, like 10,000, and then that comes down to 100 or 200, imagine just changing your acquisitions from 1.1% to 2.2%. It's a small change, but just doubling it has a significant increase in the number of activations and in the retention that you're going to have. So, for example, the retention side, let's see actually. So when you're talking about the acquisitions, you're looking at more conversion type work that you want to do. So how do you create better call to actions? You know, if you have your web page or you have your app and you don't have a very clear call to action for signing up, you might want to try it, you know, as simple as changing colors. You might want to have multiple buttons. You might want to have inline registration and just keep it as name and email, and then they're ready to go ahead. So you want to reduce the friction for someone to sign up and activate, because then the next piece, the activation, this 20 to 50%, this is where your compelling offer comes in. And here again, you want to do a lot of experimentation. So you might have a certain price that you're charging, and you might want to play with, what if I reduce the price? Does that increase my activations by getting a compelling offer? Or can I create some other kind of compelling offer that doesn't impact price as much? So if you put this into a spreadsheet and you look at these numbers and these percentages and you just play with it and you change the numbers around, you'll see a significant change in benefit just by doubling some of these numbers. And these ranges are from companies that have started at the bottom and doubled those percentages and seen significant increase without ever having to impact the number of visitors. So you're already getting the traffic, so take advantage of that. If you want to get into more measurements and you're talking to venture, you know, some of the things you want to keep in mind is they have some additional key performance indicators or measurements that they want to track. So this term of CAC, customer acquisition cost, will come up. And this is really, you take your total selling and marketing costs and you divide it over that same period of number of customers you acquired. This is going to be more on the SaaS side of things or application side. And if you're doing more services oriented or something longer term, then it's going to probably be more of LTV, lifetime value of customers that you want to track and be able to report on. And the key thing is to get in the habit of doing these things early on, because you want to show milestones, you want to show momentum as you're growing in that as well. Just continuing on in terms of what else you can do. So you also, from an inbound, from a content perspective, this takes, I would say you have to have a strong belief in this, because sometimes you have to put a lot of effort before you see the reward, especially on the content side. So if you're looking at blogs, writing articles, you may want to be doing something like 3 to 5 a week in some cases. Some companies are just very aggressive in terms of the content. And to do that, you have to get very creative and you have to create a budget for it. So you may have internal people doing the blogs and articles. You might actually hire a outside writer that can do it as an anonymous writer or write it under the umbrella of your brand. And you're looking at, in the US, it's somewhere between $200 to $300. I imagine here it might be 150, 250 pounds. It's usually not as expensive. And then you can also get your user base. So if you already have an existing user base or you have fans, now you get user-generated content. You might just need to give them a small incentive, and it might not even have to be a monetary incentive. It might be just something that they get to, you know, if you're building a community, now you can give them recognition within that community. Articles is where you're going outside of your own platforms, and you're getting people to write about you, or you're writing your own articles that are published on your trade publications or places that your target audience happens to be. And those people then will get to see your name. Again, this is one of those things, I call it the long game. You have to just put it out there, because after 1 or 2 articles, it's not going to do much. But over multiple years, all of a sudden, it's going to be great. It took us probably about 2 years, and then all of a sudden we got a call from Google saying we want to work with you on your platform. You know, and that's just because we're pounding the ground trying to get these things to happen. We've had a lot of inbound requests from people reading about our articles. We've written a couple of blogs, and the nice thing about blogs, or actually any of the content, is it's more evergreen. So if you write it in a way, so we actually take our dates out of our articles so that it remains a little bit more evergreen. And what you do is, write it in a way where you're not mentioning years or time frames, and now your content can last for much longer. And we have, yeah.
What's your opinion on, it's pretty common, just sort of refreshing titles and date tags to make something appear newer? It's often an SEO trick where people are looking for.
Yeah, you can do that. I was thinking about mentioning that, but yeah, you can go ahead and change the tags and do a refresh, and all of a sudden it just cycles back up and it gets a little boost to give you a little bit more back.
Okay. Have you seen any negative consequences from that? I haven't. But
It doesn't seem like you would have a consequence for doing that.
Cool.
So, and what we'll do is we'll take our blog content and then we'll just go through a cycle and we'll just re-promote it again on social as well. The challenge with social is, now everything's becoming paid. There's no more organic social available. Video content is another one where, for years and years, everyone's saying more videos coming out, and there's different ways to do this. There's, of course, your kind of explainer video, which is the quick 30-second or 45 or 90-second. Here's what we do, what we offer, and it can be done in-house. It can be, produced. We use animation services, and sometimes they can be well below the $500, £500 mark. You don't have to, and then we've also spent $8,000 on a video that lasted 60 seconds. So it just depends on the production quality and what you're trying to achieve. The other thing you can do is how-to videos. So these are, getting out there, putting them out on YouTube, putting them out on your self-service knowledge base portal, so that customers have an easier time using your service or your application or your product. And then you could also encourage user-generated content of people using it, and that can be based on contests or things. You're getting engagement, plus you're getting content built out. And then you can also have videos of demonstrations and things that you're doing. So these can be done in-house, they can be outsourced. We've used Fiverr a lot, so we've actually written scripts, and then we just hire someone on Fiverr, and it's like less than 50 total, and you have a pretty professional green screen being used, and so we can drop, we have in-house creatives, so then we take the video and then we drop our own logo and stuff behind the green screen as well. And we just needed a kind of a spokesperson to say the script without having to look at the notes. And then of course you can just do it yourself. I don't see any harm in creating your own rough content, even if it's on a phone, a smartphone camera. At least the content is getting out there. More things that we can talk about here. So you have the keyword ad display, which is important. At least for us, we found that you need to have large format. And this was actually a good tool in the beginning, because we would have people call us and say, hey, we just saw your ad on CNN.com, and it just makes you look a lot bigger, or on BBC if they support the same thing. It makes your company look so much bigger when you have these ads running on places that people are visiting. You can also use other sites. I think there's bigads.com is a way to research some of this stuff. For content, BuzzSumo is a really good tool that helps you figure out what the high traffic content is. So that I think is pretty straightforward, keyword and display. Retargeting, of course. So what we do with retargeting is we create different audience buckets. So you can have different pages, maybe it's different verticals or different types of audiences, and we'll have different buckets for retargeting. So as long as you hit, I don't know if it's 100 or 200 visitors, it'll create a bucket, and now you can give a different retargeting message to these people. So if someone signs up for a trial, you drop them into a different bucket so that you're trying to activate them. Or if someone didn't go through to trial, now you want to do something that will encourage them to do the trial. So you can play around with the retargeting, you can play with how long it runs for, and it's definitely a very good tool to use to recapture your existing content. That's the best way, because they've already become familiar with you, and now you just need to get them to come back and go through the conversion. PR and analyst relations. So this analyst relations will depend on if you're more B2C or B2B. I always believe in third-party credibility, and so I also like PR. I always encourage even a startup to really consider doing PR right from the beginning, as early as possible. You are looking at retainer-based services, and it can get expensive. You're not going to see results for 3 months, at least. So you have to believe in it, just like you have to believe in the content side of things. But at the end of the day, it's great to have someone that's constantly thinking about this, because you have enough on your plate rather than having to worry every day about how do I pitch this out to the media and how do I get someone to write something about this. And then, of course, the basics around email marketing. So right now, what we've done is we've really segmented our audience, and we do it mostly by vertical, but then we also try to do it by the type of role that the person has, and this is more B2B side of things. But what you want to do there is try to personalize the emails as much as possible. We've been able to hit 55-60% open rates, and sometimes 16 to 20% in terms of click-through rates by making a couple things. One is you'll spend time building an email and writing the content. At least half that time should be spent on what the subject line should be. Don't overlook the subject line, because if they never open it and look at it, all that work that you put into the email has gone to waste. So make sure you still pay attention to the subject lines. And then you want to make sure you have your compelling offers. Keep them simple. We sometimes have emails with about 3 sentences because I think if you're used to getting emails and spam, if you see a long email, you just don't have time to look at it. And you're just trying to get people to get a taste. So it's better to just go with a short. And again, if you're not comfortable with that, then test it. Just continue to test different things. On email, I think that's all I have to say about that. So that's the first piece. And how long did we go there? Okay, so that wasn't too long. That was about 20 minutes. I probably have another 10 minutes on what I call bonus material. So I'm going to go into high-tech or tech product adoption, or in terms of, have any of you read Crossing the Chasm or Inside the Tornado?
Halfway through Crossing.
Okay, yeah. So this is kind of a preview from there. So this is basically the tech adoption curve or life cycle. And what you have is you have the innovators, the visionaries that are at the beginning. So anytime something new comes out, you have people that will take a leap of faith, or they're just so into tinkering and exploring things that they will test it out. And that's a very small piece of your market. That's your early 3% of your market. And then you have the early adopters, where now someone that is willing to give you a shot. This is a viable business. They have budget. They're part of that early adopter group. And then you have the early majority, the late majority. These are the people that really need to see that you're gaining traction in the marketplace. They want to know that you're a viable service and an offering before they're going to commit to it. But if you look at it, that's 60% of your revenue is going to come from that market. So you have to get there very quickly. But this piece about crossing the chasm, and it's a great book, is this chasm that comes right in the middle, right in the early stages. And this is where companies think that the approach they took right in the beginning to get these early innovators and visionaries is going to work for them as they try to move into the next series of adoption. And that's not the case. You have to have a shift in your mindset, and that's what this book talks about. But one of the things that it mentions is the concept of a bowling pin. So a bowling pin, and this is, I think, very difficult for entrepreneurs, is to pick a very narrow niche and work within that niche. So you want to come up with a solution, which is, in the book, it's called the whole product. So a whole product would be not just your product, but it's also what the customer expects it's going to do for them, and why they would want, what the value proposition is around, why they would, what the compelling value prop is. And then you want to be able to augment it with add-ons, and then you might want to add it ancillary services. So it might actually be third parties that are making your product work. For healthcare or something, is you have service providers that are adopting your product and helping it look kind of gain this ecosystem. So Salesforce would definitely be someone that's very mature across that. They started with their own software. Now they have platform as a service, and they have so many different apps and providers that integrate into their platform. So if you're evaluating a CRM system and you're looking at add-ons or widgets, or you're looking at WordPress, for example, for your website, you're going to consider, hey, what kind of widgets or add-ons, what third-party applications are ready for me to integrate without me having to do extra work? And that can be the difference between you being selected and someone else being selected. So the bowling pin goes into this niche, and it says you have this whole product that you need to go into a very small niche and with a certain use case, and then you want to plan ahead and say, okay, well, this is the niche, and now I want to have something very related, whether it's if you're going after research firms, and then you want to connect with people that are analysts, that would be kind of a related market to those people, or attorneys or solicitors, those would all be kind of related in terms of a segment of people. And then from a product perspective, you want to slowly add more capabilities into the product. So the researchers just needed very basic products, the solicitors need a little bit more, the analysts need a little bit more. So eventually you're growing your product, and the appeal is more broad, but you're doing it in a way where you're knocking down these bowling pins and winning the market. So you want to win the market, meaning that you want to get 40 to 60% market share, and that's what it talks about, is you need to find that niche where you can actually get 40 to 50% or 60% market share in that niche. And that's how you're going to be really scaling up very quickly. So that is the first half of it, part one. And I'm just going to give you a quick teaser for the next section that we're going to cover. So the question is, how important is retention? And what matters is, what do you have writing on it, right? If your house is built on something, then retention probably matters, like we spoke about. So we'll stop here for a break, Q&A, and then we'll continue into this section as well.